What's going on, you filthy mother? Okay, you know what? I'm not even going to curse at you guys. Now, this video is important. Um, for those sending me messages, like, listen, not only am I supporting you guys on Twitter, but I have a private group. These are seasoned traders, older guys, been playing this game for a minute. They know what the fuck they're doing, but they're sort of kind of set in their ways and they overcomplicate things sometimes. And I'll give you an example. Right. We have this gentleman in the group. Shit, gotta start reversing a little. Make me not feel like I left money on the table. Oh, never mind. It was also confusing. It will be the upper Bollinger Band. It's off white. My 13 EMA is white. Or maybe it is gray. My response to him was, what the fuck? Your complexities are getting in your way. For those who've ever been to a gun range and got preached on, proper trigger control, holding the weapon the right way, etc., etc. Now, what you're doing at the gun range, or pretty much with any sport that requires muscle memory, is you're practicing for that muscle memory, right? You go ahead, your presentation, your sights are aligned, trigger control. Okay. That's what TA is. If you take the time after market, you can't do TA during the market, and I'll explain that in a second. But TA during the market, especially on a 5-minute chart, doesn't apply. However, if you go ahead and you practice after hours, you set your supports, you set your resistance, you get yourself familiar with the chart, how it's playing, what it's doing, then when it's time to point and shoot, again, the market is point and shoot. When we are on the 1-minute time frame or the 5-minute time frame, we don't have that much time to draw trends, patterns, etc. Now we can do it before we enter the play. But the 13 and 48 EMA is a point and shoot strategy. Now let's go ahead and look at the chart here, because if we go on the daily, we can pretty much see the trend. The SPY likes to run and then pull back, run, pull back, run, pull back. And this area here is unlike what we saw for the majority of the year. However, the SPY is rather predictable, and this is why I like to play my plays on the SPY. Now, let's go to the 5-minute chart, because there's a couple of things I want to make note of. Now, I don't know if I covered this in too much detail in my previous videos when I was talking about the 13 EMA, 48 EMA crossover, but I do have the 200 EMA. Now, why do I have that? Because the 200 EMA on the 5-minute chart lets you know whether it's in an uptrend or a downtrend. If you see that price action is below the 200 EMA, then you know your put signals are going to be 9 times out of 10 profitable. If we look closer, we could see there wasn't really a crossover to the upside. You guys could see that there, right? You guys saw that line coming on a 5-minute and you thought like, hey, it's time to go ahead and make some calls. No, there was no crossover that happened. In fact, we have a little gap there, but you could see the 13 EMA continued on the trend. Why? Because the 200 EMA was telling us the long-term pattern. So if you went ahead and took this play after this fake out, you printed. Some of you are limited to weekly options depending on what platform. Now, I know a lot of you are like, well, I'm not going to do Webull because payment for order flow. I know Robinhood has limitations on what options you can play, but I do prefer Webull for options because it gives you every option through the week. And if you're playing on the 5-minute chart, you are playing O-Day or you are playing next day. That simple. It is very, very simple. Now, if you're playing on the 4-hour chart, let's go ahead and take a look. We're now on the 4-hour chart. The 4-hour chart is going to give us 3 candles on the intraday at or about, right? So those 3 candles, you're looking for the swing reversal, you see? So if you were on the 4-hour chart and you saw this candle here, big dip, then you got confirmation here. You see, we got the crossover. You would go ahead and enter your play on this candle and pretty much set and forget until the next day. However, with this much volatility on the daily, especially with the SPY, and especially with the way the market is, I would say like you would better off playing the daily. Now, why? Because the daily shows us pretty much a solid, steady pattern here. We're always above the 200 EMA, but for most of the year, we saw this a bounce, continuation, a bounce. We had some crazy stuff happen here, and then we had some crazy stuff happen here, right? The Omicron. But for the most part, you could use the daily for long-term plays, at which time you're going to go ahead and play monthlies. Okay. So also on the daily, you're not going to get many crossovers. But here we have a crossover on this candle at 445. That crossover pretty much ended at 473. Now, what do I mean by ended? The candle came very close to touching the 13 EMA, which signals it might be time for a reversal, right? So you would maximize your gains on this candle. Guys, we don't have to overcomplicate the strategy. If you're overcomplicating the strategy, it means you are growing impatient. And I've always said, don't do what you think the chart's going to do. Do what the chart is telling you it's going to do. Now, let me show you some crazy returns for the day. Because, I do a lot of these videos when the market's closed, but we're doing it when the market is live. And for the record, my trading day is done. I was done by 10:30, I think 10:45. And then I will re-enter at or about 2 o'clock. Let's talk about you got margin accounts versus cash accounts. And people with margin accounts under $25,000, you're limited to 3-day trades a week. And you know that's actually it's a system put in place to make you lose money, right? I mean, they're giving you margin, but you should not be using margin with a small account. You want to go to cash. And when you go to cash, and I need you guys to go ahead and get a fucking pen and paper right now, because this is going to change your life. This is going to change the way you trade. So you got that pen and paper ready? Good. Now, you have a portfolio of $5,000. You're looking to make an entry. And, well, how much is your entry? No more than 10%. Up to 10%. The more conservative trader is going to do about 5%, but no more than 10%. So let's say you have a portfolio of 5,000 and you're only entering 10% per trade. That means you're risking $500. Now, here's another rule, and I'm going to go ahead and switch cameras because I like pressing fucking buttons. Go ahead, switch the camera. Oops, wrong one. Okay, we're on the right camera. When you enter a trade and you go in with $500, let's say that trade made you a little uneasy, right? Because you did not get full confirmation on the candles. That's fine. If you lose $50, get the fuck out. Get out. That means you only lost 1% of that portfolio in that trade. That's fine. You have 9 other trades that you can make that day. The EMA crossover strategy, as long as you are patient and conservative, you should be winning 2 out of 3, 3 out of 4 trades per day. And guys, if you're doing more than 4 trades on a day, you are over trading and you are reaching. That's another thing. Do not reach for play. I rather preserve my wealth than risk it on uncertainty. All right, keep that in mind. Now, going back, you exit on a $50 loss, right? That $450 that you now have settles the next day because it's a cash account. You got 9 other plays to work with. You go ahead and you enter the next play, and you enter the next play with more conviction because the EMA provided more separation. And I'm going to show an illustration on the chart right now. But if you allowed yourself for that patience, you probably would have jumped in maybe a little late, but you probably still would have made 30, 40, 50%. In fact, we could go ahead and look at the options chain here. And we're gonna use what happened today as a great example. Okay, so take fucking notes. Now, here, this is in real time. We see that the market is pulling back and it has to. There's money that's going back and forth. There's money made and lost every day, right? But the market isn't always in a perpetual downswing. In fact, the opposite's true, right? We go to the daily and we could see, you know, the market is rigged. It's in a perpetual uptrend. Okay. But let's go back to the play in question because I know a lot of people got faked out on this one. But this play in question, if you entered on this big candle, you printed at 474. So this candle here sits at 467. If you opened a put at 467 and you got the confirmation on this candle here, yes, you're a little late to the party, but let's go ahead and look at the options. So here we are on the options chain. Now, if you looked at the price action and you got that signal, the conviction at 467, right? You put the put here, you were up 97%. If you put your put here at 466 because you weren't convinced, you're still up 80%. Now, let's talk about that $50 loss because that play gets canceled out. It's available to you the next day, T plus 1. Got it. Options are T plus 1. But then you re-entered another play with $500 and you made 100%, 80%. So you made $400 to $500 on that play. Guys, again, there's no hard and fast rules to the market. Okay. The thing is just like when you go to the gun range and you're practicing your presentation, you're practicing your sight, and you're practicing your trigger pull. All that muscle memory prepares you for the market as it moves daily, and it will force you to make more patient plays. It will force you to respect your portfolio. Now you got 8 other plays that you can possibly enter. You preserved 450 in net gain, right? Because you took that $50 loss, but you took your $500 win or your $400 win. So you're up 350 to $450. If you could do that consistently on a daily basis with just $500 on a play, you're making well over 80,000 a year. Now, there's some of you who may have, a career that pays more, like car salesmen. Now, car salesmen can make 6 figures a year, but they're at the dealership almost 50, 60 hours a week. So time is money, right? Value your time, value your money, be patient, do what the chart is telling you it's going to do, not what you think it's going to do, because when you assume, you make an ass of you and me, and you will be fine. Period. We don't have to throw all that wizardry onto the chart. It's unnecessary because we're pointing and we're shooting. Anybody who goes ahead and presents all that magic on a chart does so to make you feel like you need them. That's simple, right? And to make you feel like it's something you can't do yourself. And this is why the financial markets exist. This is why you got all those shiny, tall buildings, in Manhattan and Chicago. And how are you paying for those $100 million, $200 million structures, plus paying out bonuses to tens of hundreds of thousands of employees? You think about it, right? There's a lot of money being made in the market. You can go ahead and get a piece of that pie yourself and not count on no one else. Anyways, guys, I know this is a long and drawn out video. This is Gabe with Review Dork. Again, patience. People make money with patience. The 1348 EMA, proven time and time again to be the bomb. It is gold. You will make money. Anyways, guys, this is Gabe with Review Dork. Happy fucking Friday. Next week we print. This afternoon we print. And if you're following me, you're not fucking losing money. Peace.